By now, most of you would have read the news that India has become the most populous country with a population of around 1.4 billion, with a global population around 8 billion. So close to 17% of global citizens stay in India, and which is more than now China, which has been the most populous for many years. So in this video, let's look at how do the people staying in India invest, save, and how their wealth is getting increased with every passing day. Now, to start with, let's look at the GDP of our country. Our GDP is close to $3.5 trillion, which makes us the fifth largest economy in the world. It's expected to cross 5 trillion by 2027, which will make us the third largest economy. And by 2030, it will cross around $7 trillion. In fact, for the next 5 years, close to 12% of the growth of world economy would come from India. And if you look at the gross domestic savings of Indians, it has come down from the levels of 35% almost a decade back to around 30% now. And the reason being that although the incomes and the wealth is increasing, but at a higher rate, our consumption expenditures are going up. And that can be seen in the double-digit growth of the consumption-driven sectors like retail, FMCG, consumer durables, lifestyle, etc. Now let's look at where do we Indians invest. If you look at the data from the financial year 2021, close to 6 to 7% was invested by Indians into mutual funds. Another 2 to 3% went into equities, and 25% went into bank fixed deposits, and around 17% of funds was invested into life insurance funds. So total investment into equities and mutual funds was around 9 to 10%. Which is quite low, because if you compare that to a developed economy like US, there are around 50% of the citizens invest into equities, and around 40% plus people have mutual funds. And we know US is generally more equity-driven culture, and we see our Indian economy, which is growing at a fast rate, would soon ensure that even our citizens would become more equity-centric investors. And the trends we have already started seeing, where around 13,000 crore worth of SIPs are flowing every month. If you look at the number of demat accounts, that has been the highest ever, close to 10 crore now. And our NSE has become the third largest exchange in terms of total number of trades in equity. So we see this trend pick up in the coming years too, and more investments into equities. So now if you look at the data around the income and the wealth generation in India, the number looks quite promising. Our per capita income has touched around $2,500 this year, which crosses that subsistence level and where we can expect higher spendings and savings by Indians. Close to 3% of our population has an income higher than 10 lakhs, which is expected to touch around 9% by 2030. By 2047, 65% of our population will be in the middle class, which will have an income between 5 to 30 lakhs. And among wealthy citizens, around 1,000 people earn more than 1,000 crore of assets currently. And we have close to 7 lakh Indians which have net assets greater than $1 million. And close to 10% of those are in Mumbai. And as per the recent data, Mumbai will also soon become the top 20 cities in the world in terms of wealthy individuals. But yes, we do have inequality issue in India, where around 40% of the wealth is with 1% India, and which is expected to reduce with the government efforts. So this is all about the strength of India in terms of wealth, savings, and the strong GDP growth of the economy. Hope you found it interesting. Look forward to see you soon. Thank you.